This sessions is going to focus on deep learning for money laundering and financial crime prevention. We have Florence Hui, Director of EY Forensic and Integrity Services, with us, as well as Maggie Chu, Head of Sanctions for Financial Crime Compliance, Greater China and North Asia, Standard Chartered Bank. Maggie, I've known you for a long, long time, ever since I first organized my event in Shanghai. Back then, so probably about 10 years ago, okay? I wouldn't reveal how old you are, okay? You are already a rising star in the financial crime, white-collar crime area. So walk us through, what has changed in the last 10 years or so?
Yeah, first, thank you for the invitation. I think in this special time, right, it is good for us to get connected somehow, whether it's virtually or physically, right? Talk about some of the challenges and trends and issues, right? I think Jeffrey and I know each other for a long time, and that time I landed from US back to China, and so I was served as China head. And obviously, 10 years ago, China, it's definitely sort of hotspot for financial crimes talents, and they're just building up a serious financial crime or AML sanction program for all the foreign banks as well as Chinese banks. So there's a harder, sort of larger demand on talent. And then also they are focused primarily on banking, right? That 10 years ago. But now, as you know, China have host some of the biggest, fintech and other kind of player within the financial service. So their focus have been shifted a little bit. Now the hot topic is talking about regulation in fintech space, especially recently. Ant Finance just announced the IPO. The last 24 hours, there were a lot of discussion on the back of Jack Ma's talk, right, on one of this conference, talk about, sort of relaxing regulation for the fintech and support more tech growth within the financial service and so on. Definitely controversial, but you can see the greater force to pushing a shift, right, focus on traditional banking to more fintech-driven payment company and so on. Here in Hong Kong, because the recent launch of virtual bank, and definitely, greater emphasis on how the AML sanction program can be adopted based on some unique challenge and unique characteristics of the virtual bank or some other payment type of player, not just a traditional bank. I think Florence here, serve a lot of those virtual bank clients, can later talk about more about that. But many of them remain old, meaning same topic, right? We're still talking about transaction monitoring. We're still talking about sanction screening. We're still talking about KYC, right? And it's still focused on beneficial owner, source of wealth, source of fund, and still talk about how technology and human investigation can clear alert more efficiently, more effectively. And also the regulator focus is still on effectiveness of the program and talk about more risk assessment. So those things are still the same. And obviously this year, one of the biggest threat or unique situation is the pandemic, right? That poses unique challenge. I think we can talk about later on. So many is new, but a lot of topic and focus are still the same for the world of AML and financial crimes.
Okay, well, thank you. And in particularly, Florence, we want to drill down more on deep learning. When we talk about deep learning, is all about applying AI and machine learning into help preventing money laundering. And given that the clientele that you work with, which is virtual bank, fintech, and that in natural course, they want to use technology to monitor KYC, and manage their financial crime risks. Now, this is a question, okay? More like a comment, sorry. I mean, just now, Maggie, you mentioned about transaction monitoring systems. So this is a very common tool used by all FI to detect money laundering. But the system itself have a predefined rules. which scan customer for transaction, for red flag, etc., and that sort of thing. However, given that because of the pandemic has pushed us to digitize even client onboarding and digital identity, would transaction monitoring systems still valid in the next couple of years or so?
Yeah, I think transaction monitoring rules or scenarios that will be still the same, but what will be the changes will be how deep learning being implemented on it. So one thing we have to bear in mind is that when you want to use AI or deep learning, whenever you need to use it, you need to have enough big enough database to assist you to do that. So the database is one of the things, and the other thing is still based on the scenarios and threshold that you set. So the implication for using AI or deep learning on transaction monitoring will be heavily depend on how big the data that you have, and then how do you twist the scenarios and the threshold to help you to utilize those data to assist you to have a more effective transaction monitoring framework.
Okay. Any comment from yourself, Maggie?
Yeah, I think just to your question or comment, right? I think transaction monitoring, it's here to stay. In fact, it's more than ever important because now the banks or the customer are moved online virtually, right? So there are a greater speed of the transaction to be done, right? And then the volume are picking up virtually. So definitely the transaction monitoring system need to be able to handle large volume of alerts, right, or transaction, as well as be able to be more smart and more effective and efficient, and also be able to make a decision or determination quickly because the nature of those fintech or new technology or new products, right? So it's here to stay, but it needs to be more agile, right? It involve more sort of transformation towards more digitalization, because the business and the client are changing, right? More and more digitalized. And also, as the foreign mentioned, it is the implication, right? The adoption of those AI machine learning are largely depend on the data readiness. So the more your data you accumulate, the more possibility you can unlock the potential of new scenario, new pattern, even predictable model, right? It can be applied. So the machine and the data can make more sense for the investigator, for the compliance officer to make a determination. So it's definitely here to stay, and it will be more important than ever, but it does push for greater speed and efficiency.
Okay. Now, here's the thing I want to challenge, Maggie, and also Florence. Because of the organization that you represent that can, or maybe I should just have the budget to invest in all of tech and new gadget to basically process this data set. For a lot of FI business joiners, some are from a security backgrounds, firms, some are a local bank, and some are insurance company that may have the budget or can deploy all this fancy tool. But at the same time, they are currently using transaction monitoring system that once they detect red flag or any anomaly, they still need to go to manual review of investigation to basically indicate whether there is a money laundering before they file a suspicious activity, right? So, how would you suggest they to go baby step to start moving toward using AI machine learning to really start looking, investigate, change this manually per se?
Yeah, so I think your comment or question is more related to the sort of proportion of human investigation, human capital versus the proportion of the technology system effort, right? And go back to the old term we always use for AML is risk-based. So for those players, right, really depends what kind of risk they are exposed themselves, so their clientele, so their product, and they don't necessarily have to do exactly the same what bank does, right? They don't need to, for example, deal with the volume I mentioned for traditional bank have to deal with. So they may have a system built with alternative data, like a lot of fintech player, right? They have other type of data which can give you additional insight, right? Help you further trim down the false positive. And also, they may not have a lot of, sophisticated or experienced investigator, right, to look at those alert meaningfully. So what I suggest is really is look at the solutions, right, whether it's in-house or the providers, right, to make sure it's customized, tailored to your product, right, and your risk. It shouldn't be a one-size-fits-all solution. And then look at the sort of hit ratio. There's no golden number. A lot of people ask me, oh, what is the magic number for hit ratio, right? Makes sense, right? Not too less, not too much, right? But I think there's no a golden number. But rather than look at your capacity planning for your investigative manpower and look at the system able, and then constantly refining the tool, because the AI or the machine learning or the system, right, can do a lot more if you train them to do. Like, for example, look at the hit ratio, case to SAR ratio to make sure some of the relevant scenarios stay, right? Some of the irrelevant, right, irrelevant ones can be retired, right? So constantly fine-tuning the scenario will definitely help them to reduce the cost or dependency of human manpower. So that's what I think, for smaller size or different type of players should focus.
Okay.
Yeah, I totally agree with Maggie. So from an assessor or an advisor point of view, we do face a lot of clients like more local financial institutions or smaller financial institutions that they do not have like so many budget to do such a big AI or machine learning, deep learning initiative. So what do they do is all depends, as Maggie said, it's on a risk-based approach. It depends on the risk that you are facing from your business. And we would advise that it is not necessary for you to consider having a machine learning or deep learning, but alternatively, it depends on your existing infrastructure, whether you would like to go for example, an RPA, a robotic process to replace some of the very manual human very repetitive work like first level review on those like transaction alerts. And I extremely agree with Maggie, there is no golden number on the hit rate. What will be the best hit rate that we should achieve of? It's a floating number. It's changed when, for example, the name screening list being changed and your scenarios on TM being changed. So what you can utilize, it's all about the data you have and also the industry benchmark for you as a reference.
Okay. Now let's move on to our next segment. Let's talk about digital identity. When we talk about virtual banking, even nowadays you can actually, get a loan without even have to show your face, etc. I mean, we've seen them in TV ads or anything like that. This question is probably for Florence. How reliable are they? Do you think these digital identity apps that be able to really recognize you, and then you do, perform a proper KYC to ensure that they are not high-risk client?
So, all right. So, how reliable? To be honest, it depends on the vendor selection. So, practically, if you want to achieve a target that you have a very high digital identity worth or effectiveness, like 90-something%, no matter what kind of solution you bought from the vendor, it's very important for you to tune it. I mean, how do you tune it to fit with your customer profile? For example, some of the financial institutions, they only onboard. So I just used the recent examples that I do some of the assessment for the virtual banks. So some of the virtual banks, like they only onboard Hong Kong customers. And also Hong Kong permanent identity card holders. So they can fine-tune their system to only recognize these kind of identity documents. But for some of the like game players in the market, they can like accept non-permanent resident as well. So they may allow their customer to, like, for example, take a photo or a video on another document other than the Hong Kong ID card. So it would comes to the question that how do you communicate with the vendor, and how do you communicate internally with your technical support team on tuning the system to match with your clientele or customer set?
Yeah, I would add, it's Florence is right. I think it depends on the risk appetite of each FI players, right? And often you have to rely on secondary or even additional due diligence or alternative solution, right, to make sure you vet it. So give you an example, like Florence mentioned, a lot of virtual banks, right? I'm a customer of one of the virtual banks. I can tell you, right, just face recognition alone is not enough, right? And also just Hong Kong ID alone is not enough, right? And they also do backhand check, right, on your background, credit score, or many other alternative way. If there is any red flag, they will ask conduct a video chat or phone calls, right, to validate further. So, and also a lot of virtual banks depends on the risk appetite. They do not accept high risk client, for example, or they do not accept on board PAPs, or they limit certain nationality, right? They do not on board, from a sanctioned country, for example, or US citizen or not. I mean, it really depends on their own risk appetite as well as the technology solution. They feel comfortable as secondary or third, and also additional documentation effort. Last I checked, the face recognition, so the accuracy rate, the best in the world, the team, right, the MIT team, I think behind that face recognition, it's only 90-some%. That means there are big percentage still, even though single digit, but still big percentage error rate. So most of banks or FI player won't be able to accept that kind of error rate, and also regulator won't be able to accept that, right? Particularly if it is solely virtually onboarding. So therefore, you need to have alternately additional step to complete the whole virtual onboarding process.
Yeah.
Okay.
Yeah, sorry. And something to add on that is like the whole digital identity verification journey is not only about like document authentication and also like facial recognition. There is also liveness detection phase on it. So whenever if your institution is going to consider to adopt some kind of these technology, you need to calculate the overall risk scoring among the three stage. That is first ID authentication, second liveness detection, and also third facial recognition. Then you will get an overall risk score or percentage for you to consider.
Okay. Now, then this come back to it. Although we have the technology on AI or machine learning or detections or digital identity and sort of thing, that doesn't actually we still have to go back to our risk-based approach of identity, whether this client is high risk or not. We still have to do the groundwork. Is that what you're trying to say?
Yeah.
Okay, and don't rely on technology so much. All those there to help you, but you have to do the groundwork yourself. Now that become increasingly difficult because of obviously now the pandemic issue, and I don't think this is going to solve anytime soon. Maybe in the next 12 months. So people are working from home. They do need banking product, loans, or any insurance, or etc., or deposit whatsoever. And vendor do come up with all sorts of solution on digital identity, compliance technology. They'll be able to help all this. So how do we really achieve deep learning and apply all this technology to ensure we prevent financial crime from happening? If you basically have to keep, step 1 we do this to step 10 we do that.
Yeah, I mean, I think technology definitely have value. I don't want the audience or you feel like technology is not helping a lot compared to 10 years ago or 20 years ago. We're in a much more exciting and more efficient and cost-effective environment, right, for AML compliance controls, right? But it's not a magic pill. Like we say, for machine learning, deep learning, you need data, right? If you don't have structural, clean data, then it's garbage in, garbage out. It's not going to help you, but rather create more trouble. Like overdue, all the alert piling up, right? They will cost you more money to hire a consultant or temp to clean the alert, right? Which is defer the whole purpose of being more efficient and agile. But then also, with the pandemic, I agree with you, it created a lot of new challenge, right? Everybody have to pretty much for a period of time working from home virtually, right? And the client is locked down, so they cannot go to branch. So they have to conduct banking service or financial service online virtually. But it doesn't change the backend system, right? Because it's often hosted in a cloud-based solution, like many banks already moved to the cloud, right? Or some sort of server, right? So it's still running, right? It's just the people towards the last leg of the level 3 review, right? Those people are sitting at home instead of in an office cubicle. I think that doesn't fundamentally change the process, right? We should have a, sort of usually three level of review, right? But level 1 and level 2 more and more be replaced by AI, robotic process, because a lot of repetitive, repeating manual labor can be replaced. In fact, can be replaced very nicely by, system and data or AI, machine learning, right? Those are already happening, which is, create a lot of cost saving opportunity. But the level 3 are the ones, where the manual investigation are still value added and they're still here to stay.
And I think for deep learning, for institutions who would like to really utilize machine learning or deep learning initiative, like for example, in the next 3 to 5 years, what you have to do, as Maggie said, you don't want to like garbage in, garbage out. So you really need to understand what are the valuable data that you can retrieve from your system to make the whole deep learning or machine learning process being successful. And bear in mind that before you can achieve the deep learning goal, you have to first overcome the machine learning technology aspect, and then once you adopt to it, you will find that deep learning will be more valuable.
Yeah, I think in fact, it is one of the great advantage virtual bank versus traditional bank. To me, right, from a compliance AML perspective, it's the data. A lot of virtual banks start from zero, right? So they have the great opportunity to better define the data, right? And the data set, right, from different system, operation system, business system, downstream system can be unified in one of the simple, one of the consistent format, and they have a unique ID for their client, which sounds simple, right? But for traditional bank, right, start business in different country, in different time zone, in different years or generations, right? That's very difficult to achieve. So traditional bank have to clean up their data to redefine their data, but virtual bank can start from fresh, which I think is a great advantage. So I think the speed of their adopting or able to adopting AI and machine learning can be much faster. But that say is a lot of bank, as you know, we're doing a lot of digitalization transformation, right? We're invest a lot in financial in innovation. So internally, we're trying to get a better data governance, right? Better data to work with. And a standard charter for them, we partner with a fintech company called Silent A, which already did a great, it's not only proof of concept, it's already in production to help us for the level 1 and 2. The whole pandemic, it just accelerated the speed of adoption, right? So before it was just one segment of the business. Now we're looking at the overall all transaction type. So that's a great, sort of evident. Technology, deep learning definitely help, regardless what type of player you are. Have a great value, but it's still at the initial stage of looking at the data, cleaning up the data, set up the foundation and framework.
Okay, this I think is probably the golden questions of all. What is considered the correct data, and what is to put into the data set, Lawrence?
Yeah, so we cannot say whether the data is correct, but is this something that helpful to your portfolio, to your initiative for that deep learning purpose? I can give you an example. It's like whether a transaction pattern that is related to the frequency of transaction that's matter to your client. So I would say, for example, if you are monitoring your clients, for example, debit card or credit card transaction, so frequency definitely is a very important element that for you to consider to put it into the deep learning process. And then, like for example, for like those fintech or for example, like those wallet business, they have a characteristic of like small amount but high frequency transaction. So you would need to consider that whether the threshold of the transaction will be matter for you to put into the deep learning purpose. Would there be a difference for a $10 transaction or a $100 transaction compared with if you're in like a private bank? Will it be a 1 million transaction matter or a 10 million transaction matter?
Okay, so that means, Florence, you actually really have to learn what the client do before you start implementing the type of data set that should be implemented, and also technology that should be deployed to do their, what Maggie say, level 1, level 2 compliance work, and then the level 3 really has to be done, by human being, and also with the help of automation. We have a question from attendee. In your past experience, what is the success rate in detection of money laundering by adopting AI machine learning transaction monitoring? Does this mean the AML monitoring system is ineffective if the success rate in detecting money laundering is 0? Can you read the...
I think that's an interesting question. First, I want to know, what is your definition of success rate? Whether it's, if this alert leads to SAR filing, that considered a success, or whether it leads to criminal prosecution, that's success. So I'm not sure what that means, but I think what they allude to, the question is really, how we view the cost effectiveness of those systems, right? Because you spend all the millions, oftentimes tens of millions of dollars to implement a tool, or then add on the AI machine learning, clean the data, all the consulting, it adds up, right? A lot of compliance costs sink into the system. So how you justify to the senior management all the money spent, right? The way we look at it is really, again, I hate to do that, but it really go back to the risk base. It's what the risk tolerance level for your for your institution, right? If your organization have a very low or 0 tolerance level, that means they don't want to miss any. And then, the chance that you spend or overspend a little bit, it's become a must, really. But if your risk tolerance or your clientele is low risk, right? The nature of the business is low risk, then, the ratio can be a little bit different, right? And also look at the manpower you have or the budget you have for clear those alerts, right? That's very important. But I haven't seen a sort of a separate metric. Just look at AI and machine learning for the compliance sort of effectiveness. Because the reason being, as I say, most of traditional banks, right, we have not yet to a place this can be a separate metric, right? It's a lot of them are still in proof of concept, phase, right? Because we need to clean the data first, and then let those data working with the scenario machine a wire time, right? And the machine and then can handle the volume we handle at the bank, which is a big hurdle to go through. Then you can track, okay, each scenario, what's the effective rate, and so on and so forth. So not yet there yet. But some of the institutions like virtual bank and maybe other clients, before I can talk about, they may have a separate metric already to track that. But I think for multinational big banks, not yet a separate metric we track on a daily basis.
Yeah, unfortunately, I'm not aware of like any financial institutions in Hong Kong right now have a separate matrix on that, whether the AI or the deep learning, machine learning machine help them to like achieve a higher percentage or lower percentage of the fraud detection or case detection. But I want to say one important point is, for the time that you first invest into the machine learning or the deep learning process, I don't have, to be honest, I don't have the data here right now. But what I can foresee is that for the first like 1 or 2 years, you won't have a very significant percentage that from the deep learning process, you are able to derive like how many percentage of case being detected by that. Because deep learning is a long way process. When you have more data, it will get improved gradually. So when it's improved, so the end of the goal or the result of the detection case will improve as well. So it will be a long time journey. I hope we have answered this question.
Yeah, but I want to add on, there are relevant metrics you can demonstrate, right? For example, your compliance officer, you just purchase from a vendor a solution about AI technology. How are you going to show, right, the manager this tool works? There are other relevant metrics you can look at. For example, the volume, right, of alert. For example, the volume could be dropped, right, and then it could be increased, but it's true hits, right? So you are catching the risk event, relevant event you didn't catch or you missed before. So that's a positive metric. Or if the volume reduced, you're able to demonstrate the percentage of reduced is actually false positive, then that's the way you demonstrate the value of the tool. But for the actual effectiveness, right, it's you have to look at the star filing, right, ratio. I think that's a lot of FIU to measure the success or efficiency, effectiveness of the tool. Is how many of those alerts generated by your system became effective STR filing, like passed through the level 3, right? And that's a good thing. And then another one is from a regulatory perspective, right? Is they often challenge you about efficiency and effectiveness. So you are able to talk about the end-to-end system as a whole, right? Because you cannot separate, say, this is AI function deep learning, but it's an essential component of your whole transaction monitoring or screening tool. So you needed to demonstrate the overall effectiveness. So sometimes separate metric may not even be needed, but the other relevant metric can even tell a better story. So just think about the management information reporting from a slightly different perspective. Probably will help to address this question indirectly.
Great, thank you. We have last questions. I do want to move on to sanction, but I don't think we have time. So Kenny is asking, with the implementation of AI in relation to anti-money laundering, would financial institute be able to cut manpower costs substantially? This is very controversial. Go ahead, Megan or Florence.
No, obviously, because but the financial crime compliance officer's role might change, right? So the expectation for us nowadays, I sometimes joke, right? We actually have multiple hats. We have to be a data analyst, right? We need to know the data, and we need to be a technology person because we need to be able to analyze those data or look at patterns and stuff. And we also need to be a regulatory, expert, right? Because we still need to keep update with all the regulatory changes and expectation from regulator. And also we need to be a salesperson, right? Because we have to sell the tool, right? Sell the effectiveness of the tool to internal partners, right? Because they are giving us budget. So we have to persuade them this tool actually works, right? The AI solution actually long-term will save money, even though short-term it burns a lot of cash or resource. And then you have to externally tell this story even better to the regulator, right? And make sure they feel confident, because a lot of those scenario or algo, what we call, are black box for the regulator. So how you explain to them, right? As a compliance officer, that's an entirely different type of a challenge. So I think human always need to be there. The more complex the system you have, right? The more sophisticated technology you have, the greater needs for you to do a good job to, multiple heading all those roles. But your sort of primary focus from more advisory probably would be chef for majority, for many of the compliance officer, right? They need to be more sort of data techie, geeky per se, than just a regulatory legal person.
Yeah, definitely. So from my client who deploy the AI deep learning technology, I don't see that they have cut their human resources on this, but definitely the technical experience that required for the compliance officer is definitely different. It will be more tech-driven.
Okay. We are kind of out of time, but last from Michael, Maggie, Florence, since when compliance role becomes so complicated? Used to be just, I'll make sure I'll follow the rules and regulation and I'm safe. Right now you need to read data sets, you need to implement technology, process, flow, and last but not least, you need to detect money laundering. For a smaller bank, Florence, I'm sure you have a lot of clients. How can they manage all that? It's a lot of work.
Yeah, I think the golden word for that is a risk-based approach. You have too many things to consider, but bear in mind what are the risk appetite of your bank and where is the most high-risk area for you that value for you to spend time and resources on it to detect money laundering.
Okay, with that, we end today with this positive note that compliance person now need to basically, take care of so much. How do you, Maggie, how do you keep so young for the last 10 years?
Keep exercise, right? Don't burn out yourself, right? I think if, I have a key takeaway for everybody is, change is the new normal, right? Regardless it's pandemic or not pandemic, technology has changed fundamentally the society and also the, banking and the financial service, right? So be open-minded, be agile, right? Always keep learning, right? Data, technology, business application. If you be hunger and be curious, you'll be fine as a compliance officer.
Okay, well, thank you so much, Maggie and Florence, for your insight and knowledge. If you want to reach out to Florence, more about how to develop a deep learning for your money laundering and financial crime prevention, please feel free to reach out to them. Florence, I'm not sure you can type your email address here. They can reach out to you, etc. Okay, Maggie, when are we going to have drinks soon?
Okay, hope so.
All right, ladies and gentlemen, thank you so much. For our next session is our final grand session, in-house legal, modernize your legal department. Even legal department now need to be a technologist. Thank you. Thank you so much for your time. Bye.